Headline risk hitting the tape. Markets are gapping down. Crude oil popping. Gold also moving higher. Crypto continues to be range bound. Right now, as we head into the RTH Open on a Monday here, we have your levels squared away. Stay with us here today. We're going to take a look at structure for the ES, NQ, and YM. Great intraday key ranges for the key levels to watch early in the session. We're also going to take a look at crude oil, gold, and Bitcoin and Ethereum here in the pre-market video here. If you are live, let me know what you're looking at here today. Let me know any charts you might want to look at. If we have a little bit of time here, we'll also get those going. All right, let's jump straight into the charts. One thing I want to show you right now is the impulse move in the ES. This is the daily time frame of the ES right here. And you'll see right there, that's the current high low of the overnight trade. That's the current open and close or current last price. That's your midpoint at the moment. When you look down here at our ADR indicator, you'll see 100% of average range. So we already have an average day's range heading into the RTH session. And when you look at a relatively high range day like that already, and price has already reached the midpoint of the day and is hanging around the midpoint, that suggests right there that we might be in a digestive phase here. We could be very digestive, and that's going to be something that we're really going to want to pay attention to, because that means the market could be rotational here for a little bit until we start to see some expansion. But the key ranges are set. So let's take a look at those key ranges here. If we drop down, this is the 15-minute time frame here. This is the ES right there. That's your overnight high. Immediate selling pressure to the downside, strong low here, and a snapback to the middle. We can get that key range by drawing this quick tool here. It looks like 1275 is the level. Let's make that 1275, and that's your key range. It's as easy as that. That gives us the levels for the day. Anytime you have that type of price action, it's a shock. It's a risk-off shock in the way that we gap down here and then develop that range. But after that price shock, this type of key range gives us the boundaries to watch for trading range action and eventually for expansion. Right now, we have a tendency here to likely trade in the middle 50% of this range for a little while. If we get down here below the key range low and into that 67.46 zone, right into this area, that could be the bear trap right there that leads you back up to that 68.12 level. But because we have a downward trending bias at the moment, especially with the risk-off tone, the best opportunity would be for any type of strength to be defended by bears, for a rotation perhaps back down within the range. That means the primary focus may be right here, 68.60 and above into 68.80. So if price rallies into this zone, that could provide a bull trap for an opportunity to return price back to 68.12 and then perhaps rotate it back down as well. So the key thing here, we could be mostly range bound today given the structure. But if we start to see additional movement or breakout expansion beyond the extremes, we have our key range targets in play. 69.45 half would be the upside target, and 66.80 would be the downside target. That means if price were to rally here into 68.80 and there's a trap, that could provide an ultimate drop into 66.80 down the road. So something to look out there from the intraday perspective. Now, if we look at the daily time frame again, and we'll move over right now to the bigger chart here, but this one right now, this is the higher time frame sitting right on that 67.60. That's a significant area of support. Look at the tremendous amount of range that we have developed right here. That energy over the last 12 plus weeks, that is significant energy. And we're right at the edge. Do we break 67.60 and open up that 66.80? Because if that does happen from the key range, that is going to be transition and expansion, and that could trigger more selling pressure ahead. So this is going to be the level to watch. That could ultimately be a great trap back up. as this market continues to trade back and forth within this larger range. So until we get that major expansion, we could be range bound here and within the range. But once the expansion occurs, it could be tremendous. All right, that's a deep dive into the ES here. If we take a look at the NQ, you'll see similar price action. So you could pretty much copy and paste that right there. But if we want to jump over here to the NQ in the split screen, right here we can see again, there's your doji day. This is your 100% right there of range. So it's already average percent for the day as we head into the RTH open. And then right here, you can see a key range high, low, midpoint. So if we drop down again to that intraday time frame, the 60 or 15-minute charts, here's that impressive sell-off. Again, we can grab the key range tool there, down to the bottom, and then 689 quarter, right about here, 689 quarter, we can make that 89 and a quarter right there, and that's our new key range. That's our new key range, and again, like the ES, there could be a trap down here where price drops into this zone. That's the trap zone right there. That's where you trap the bears. You look to return it back to the midpoint. That's your trap in reverse. You could look to bring it across the range. Given the overall downtrending bias, again, the best opportunity may be to trap above the key range high. That's right there, 24,900. We go above 24,900 into 25K right there. That could provide a rejection or a reaction. That's your bull trap, and then you return it back down toward the middle of the range. So right now, working off the key range, and again, as we go back to the higher chart here, let's move this back over. The YM looks very similar. So again, YM sitting right here on lows and at break even for the year. That black dotted line is break even for the year. It was taken bid to begin the year. That was your 3-day rally. It set the hedges for much of the year since then, and now we've come right back. This is incredible. This is incredible the way this thing has stayed within this narrow range, but we are break even on the year after that trap, after a lower high rejection. This could lead to quite a pullback ahead, or maybe are we in this spot right here or in this spot here where today is today, but what if tomorrow is a rally back above 48.8? Are we now headed back up within the range again, or do we fail out of this key range? So the key range will be very important. I won't drop down into the intraday time frame. We've already done it for the ES and the NQ, but it's the same thing for the YM. Get that key range up. It'll give you the key levels. All right, looking at the chat over here. Hello, hello. Good to see you from India. A question here regarding crude oil. Perfect timing. Let's jump over to crude oil right now. Crude oil. Let's bring up the chart right here. And I want to look at crude oil. Actually, you know what? Let's do it on this bigger chart right here. Let's look at crude right here. We got the big gap up, right? Of course, this gap on U.S., Israel striking Iran. We have retaliatory strikes. You have, I believe, refineries hit. There's nat gas disruptions as well. So we knew that this could be a significant high volatility event. We knew, even in this up move, the increasing tensions, while we knew the trajectory was up, we also knew there'd be volatility there. We were right on with this market. On that day, we called the low. The next day, we called the first day entry. We mentioned 56 to 57 was the retest hold to begin the year. And then we were looking for 55 to 56 for the quarter. But once this key range developed, rather, was it this one or is it this one? I think one of these two key ranges. I think it was this one right here. Yeah, that key range developed. It gave us 69. So we've now reached that target and then some, and then some. And when you look at this market structure, and we can go back, let's do a weekly chart. We'll go way out and look at a weekly chart for a moment. But one of the things that you'll realize here is we have 10-point increments on the market structure. So 54s are major support. Add 10, 64 is major support. Add 10, 74. Add 10, 84. Add 10, 94. So it's every 10 points market structure on the fours. And we've just rallied from 64 to 74. We could backfill in here a little bit below 74, but 74 is the gateway that opens up 84. The way this thing plays out, we could easily see more strength out of crude oil. I don't think it'll be like what we saw before. But 74 opens the door. All right, let's see. Okay, jumping on to gold. Let's look at gold right here. This is gold and a big time push to the upside. Now, if we take a look at gold from a multi-day perspective, we've gotten our upside break, and that's what we were looking for. This upside break right there. 4-day range, upside break. We mentioned before it would be a 300-point breakout move or thereabouts. From this low of 52 plus 300, that points you to 55. So 55 easy could be the next upside target here for gold futures, looking for a continuation toward 5,500 and perhaps even higher as this thing continues to work toward the key range high. Now that key range high is so super significant that any rotation into that high, while we could push beyond it, we could fall back into the range and continue to develop some market structure up here. But right now, working its way higher through 5,500 ahead. Looking at, let's take a look at Bitcoin here. Let's take a look at Bitcoin, and what I want to do here with Bitcoin is really show the compression that has developed here over the recent period of time. And let's bring up the bigger screen here. This is what it looks like on a side-by-side. That compression right there, that one is so super significant right here. After that release of energy to the downside, that was meaningful. Now we can count these days off: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days since the initial reactions. 15 days, that is a full 3 trading weeks. So we have 3 trading weeks of energy built up into this range. But when you have a release of energy, the release doesn't necessarily have to take all 3 weeks. It can be front loaded. It could be the first week and a half to 2 weeks gives you the max stretch. So, do we get expansion out of this 3-week range over the next 1 to 2 weeks? Look at the compression down here, 44% of average range. If we look at further metrics here, this 3-week range is in the bottom 13 percentile of the data set over the last year. So if we're quantifying this range, it is meaningful. And if we get expansion out of this range, what are we trying to look for here in terms of the amount of points? I mean, 20,000 would be average. Above average right now would be that 26 number right there. So what are we going to get? So again, we have another 20,000 points of range built up energy inside this Bitcoin range that could really release it in a big way. The key level here down below, I mean, 62.5 has been the level we've talked about for a while. We've talked about it since before we broke 75. Because we mentioned if we break 75 and get to 62.5 and get halfway down to 50, it increases the odds of extending that move into 50. Even, this is the big part, even if we return into 75 for a retest. Big time potential there. Okay, now, Lastly, we'll take a look at Ethereum here from the same perspective. Look at that compression here. Look at the quantified points here. Only 350 points of range inside that range. That's 39% of average. And the potential here is for 1,000 points. 1,000 points easy. On average, you'd get 800 right now. So we got a lot of potential points. When you say 800 against the 2,000 or 1,900 we're at, that's percentage-wise meaningful. Are we going to break 1,800 and drop 800 points to 1,000? That's the potential. If we're going to put in a strong low, maybe we drop first, say 1,400 again, and then rally off of that level 800 points. 14 to 22. We'll see how it plays out, but there's a tremendous amount of energy. Through 2150 could open up 800 points to the upside. Which way will we go? Like I've said before, the crypto markets haven't found their low. They've tried to react multiple times, but they just haven't been able to respond in a meaningful way. Maybe that changes and it only takes one transition day, but until then, not really seeing the juice you'd like to see out of these markets, and you got to continue to be patient and mind your risk here if you're engaging these markets. Okay, that is pretty much going to do it here for today's pre-market video. Again, I want to say thank you very much for joining me for this live stream. If you like these live streams here, please let me know in the comments below, bringing it directly to you instead of uploading the video so that you can interact in the comments live and provide your thoughts as well. If you like that flow, let me know in the comments below. Give me a big thumbs up. Also, remember, subscribe, hit the bell to be notified, and I'll see you in the trading room.